Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow. This time the market opened just under the February and March 2017 low at 104.92, but pierced it above, though not that far before moving lower. The market seemed cautious about testing the top of the still influential upper time, currently at 104.35 of the January to May 2021 bearish Andrews pitchfork. I would normally retire such a pitchfork after two consecutive closes over it or under it, but in this case I've made an exception, not just because I think it might become support, but for two other reasons. Firstly, this pitchfork has been broken many times on the lower time, currently at 96.94, yet each time it has repaired itself. Secondly, because of its long life, it's over a year and a half old, I think there may be more to give from this pitchfork, so I'll keep it on here for a while at least. Now, just below the upper time is the support of the congestion zone, 103.38 to 103.69, which currently also contains the long moving average, currently 103.49. Meanwhile, above, we have the old target X2 at 105.35. This is the primary target for the September to date ascending wedge pattern, currently 99.83 to 102.58. This pattern is highlighted in dark blue. A secondary harder to reach target X3 is a little higher in the 107.65 area. We still have overhead the penetrated April 2017 low at 105.68, then the 2020 low at 106.35, and the April 2020 low at 107.25 before we reach target X3. And then there's the May 2020 low that is just above that at 107.66. So far today, we're a little lower on the opening, moving towards the broken upper time, but not really testing it as yet, and seemingly actively rejecting it to move up and test the February and March 2017 low overhead at 104.92. Cable, aka sterling against the US dollar. A second bearish black crow yesterday and a follow-on to the previous session's interesting bearish below the stomach pattern. Prices reached up to just over the June 2020 low at 122.48, but found that they didn't like it up there and dropped lower, below the Fibonacci and other base congestion at 121.5, but halting at dead at the declining long moving average just below that. That's currently at 121.17. A little lower we have support from the May 2020 low at 120.73, though I'm dubious on how good this is. And then the upper trend line, currently at 119.31 of the late September to late November ascending wedge pattern. I've highlighted the relevant trend lines for this wedge pattern in dark blue to help visualize what is going on. Overhead, we still have the primary target X2 in the 124.20 area and a secondary harder to reach target X3 in the 128 even area for this pattern as well. Now, so far today, well, the market is currently being capped overhead by the Fibonacci and other congestion in the 121.5 area, and though the long moving average below has been pierced, it's still putting up a spirited effort. Prices have moved up and away from it. Euro sterling, a second bullish white soldier, but really no different in outlook than the previous two sessions. All the targets, primary and secondary ones, for the November-based roof pattern, which I've highlighted in dark blue, well, they've all been achieved, and we seem to be undergoing some indecision right now. Below we have the slowly rising long moving average, currently at 85.45, whilst above we have the ever so slowly rising medium moving average, currently 86.28, though this was briefly breached these last two sessions as well as today. Above this we have the April 2020 low at 86.69, but I suspect the lesser Fibonacci resistance at 86.98 that doubles as the base of the roof pattern is probably better resistance. Meanwhile, below the long moving average we have the April 2021 low at 84.70 and the March to date uptrend currently at 84.55. So far today, testing and piercing the overhead medium moving average, but it's a cautious move higher this time. We've pulled back and we're just resting on it at the moment. Next overhead will be the April 2020 low at 86.69. US dollar against the Indian rupee. A bullish opening long white Mariposa yesterday to balance up the previous session's bullish closing long white Mariposa. This makes the open and close area around the 81.90 area very interesting, and not just because we have the short medium moving average, currently 81.88, rising up into it, nor because it is the site of the previously highlighted congestion, though this has no doubt played a part in this, is because it is so clear a piece of support now, and maybe resistance in the future. I've recently looked at the mid-November today action as possibly building into an ascending triangle type pattern. It was early on, but I'm still minded to do so, though any primary target has already been achieved, and any harder to reach secondary target, well, that would need a close up to the all-time high at 83.26. Speaking of reaching higher, the top of the action yesterday was capped by the middle time overhead, currently at 82.73, of the mid-September to mid-November bullish shift pitch chart. You can see the tines highlighted in bright red on my daily chart. So far today, well, a lower open but an immediate try higher all the way up to the middle time. But this time has capped the rise again, and prices have dropped back to around, well, the open and yesterday's close really. There are elements here of a possible shooting star pattern, but also a doji cross and even a gravestone doji. They're all in there right now. US dollar against the Brazilian real. An immediate countering bearish opening black Mariboso and bearish Harami, if only just on the latter. The market opened and straight away dropped down through the following. The 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. A 50% Fibonacci line that I had repeatedly said is not that good a support or resistance. The short medium moving average currently at 527.12, the medium moving average currently 523.33, and the better looking support of the 50% Fibonacci line, the March 2021 to April 22 move at 522.76. The next support was the lesser Fibonacci line at 520.27, but the market didn't manage to reach down to that, closing as it did right on the medium moving average. The recent actions, including yesterday, continue to raise questions about last week's weekly key reversal down and the outside month made here in November. US dollar against the Mexican peso. A quite rather than very, so it's a quite rather than a very long-legged indecisive spinning top yesterday. It was a pause in what had earlier been a very suitable follow-on higher seen in the previous session to last Friday's key reversal up. Interestingly, the market was capped at about the same level as Monday, just ahead of the declining medium moving average, currently 19.9080. But the dip went down quite a way, below the declining short medium moving average, currently 19.7405, the April 22 low at 19.7168, and the middle time of the March to May bearish shift pitch currently at 19.6869. The one highlighted actually is in dark blue on my daily chart, and even further but slowing and halting around some light congestion from the start of November between 1962.5 to 1965, but it's more likely it started halting ahead of early June congestion between 1956 to 1964. At the end of the session, prices closed up over all of those, just over the short medium moving average. Overall, from Friday until yesterday, market has recovered in two sessions. Well, not two sessions. Let's expand that to say last week and what's happened so far this week so far. Just to be clear, in that time, the market has recovered most, if not all, of the declines, the grinding declines seen throughout November. This has gotten me pondering as to whether the action since late November, including the time crossover seen in late October, may be, just may be, a possible bump and run reversal bottom. I need to think on this some more. Now, so far today, a slightly higher open with a dip down to the April 2022 low before a move higher, but not as high as the two previous sessions high as yet. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.